The year is 2025, and if you're paying attention, the echoes are getting louder. The same patterns, the same mistakes, the same blind confidence that preceded the greatest economic disaster in modern history are all around us. Most people see rising stock markets and think prosperity, but the smart money sees something else entirely. They see 1929 all over again. When people think about the Great Depression, they imagine breadlines and dust bowls, but the real story isn't what happened after the crash, it's what led up to it. The Roaring Twenties weren't just about jazz and flappers, they were about a financial bubble so massive, so intoxicating, that an entire nation convinced itself the party would never end. Sound familiar? Here's what should terrify you. Every major warning sign that preceded the 1929 crash is flashing red right now. The wealth inequality, the speculative mania, the easy credit, the government's desperate attempts to keep the machine running. We're not just heading toward a repeat of history, we're already living it. The only question is whether you'll recognize the pattern before it's too late. Let me paint you a picture of America in 1928. The stock market had been climbing for nearly a decade. Everyone from shoeshine boys to millionaires was playing the market. Credit was flowing like water. People were buying stocks on margin, borrowing against their homes, convinced that prosperity was permanent. The newspapers called it the new economy. Politicians promised that boom and bust cycles were a thing of the past. Technology was going to change everything forever. Does any of this sound familiar? It should, because we're living through the exact same delusion right now. In the 1920s, the Federal Reserve kept interest rates artificially low to stimulate growth. Banks were lending money to anyone with a pulse. Speculation wasn't just encouraged, it was celebrated as patriotic. The idea that markets could fall seemed absurd to most Americans. After all, stocks had only gone up for so long that an entire generation had never seen a real crash. Today, we've had over a decade of near-zero interest rates. Money has been so cheap for so long that entire industries exist only because of easy credit. Venture capital funds throw millions at companies that have never turned a profit. Cryptocurrency speculation makes the stock market gambling of the 1920s look conservative. And just like in 1929, anyone who suggests this might end badly is dismissed as a pessimist who doesn't understand the new paradigm. But here's the part that should keep you awake at night. The wealth gap today is actually worse than it was in 1929. In the late 1920s, the top 1% controlled about 23% of all wealth. Today, that number is over 32%. The concentration of assets in the hands of a few elite families and institutions has reached levels that would have shocked even the robber barons of the Gilded Age. This matters because when wealth concentrates at the top, consumption at the bottom eventually collapses. The rich can only buy so many cars, so many houses, so much food. Real economic growth comes from the broad middle class having money to spend. But when that middle class is drowning in debt and struggling to afford basic necessities while assets inflate beyond their reach, the foundation of the entire economy starts to crack. In 1929, ordinary Americans were leveraged to the hilt. They bought stocks on margin, meaning they only put down 10% and borrowed the rest. When prices started to fall, margin calls forced them to sell at exactly the wrong time, amplifying the crash. Today we have a different kind of leverage, but it's everywhere. Corporate debt has exploded, government debt has exploded, consumer debt has exploded, student loans, credit cards, mortgages that people can barely afford. The entire system is built on the assumption that tomorrow will always be better than today. And just like in the 1920s, the people in charge keep insisting that this time is different. Central bankers talk about soft landings and controlled inflation. Politicians promise that government spending will create prosperity. Tech billionaires claim their companies are worth more than entire nations because of revolutionary breakthroughs that will change everything. The same arrogance, the same delusion, the same refusal to acknowledge that what goes up must eventually come down. But there's something even more dangerous about our situation today. In 1929, most Americans still lived on farms or in small towns. They had skills. They could grow food, fix things, survive without complex systems. Today, we're utterly dependent on supply chains, digital payments, and institutions that exist only because of confidence and credit. When that confidence breaks, the collapse won't just be financial, it will be civilizational. The smart money already knows this. That's why billionaires are buying farmland and building bunkers. That's why central banks are quietly accumulating gold while telling everyone else it's a barbarous relic. That's why insider trading by members of Congress has reached record levels. The people with access to real information are positioning themselves for what's coming. Meanwhile, the general public is being fed the same lies that soothed Americans in 1928. Everything is fine. The economy is strong. Technology will save us. The government has tools to prevent another depression. Trust the experts. Don't panic. But here's what the experts won't tell you. The tools they used to fight the last crisis have created an even bigger bubble. The money printing, the bailouts, the zero interest rates, they didn't solve the underlying problems. They just postponed them and made them worse. And now we're facing a reckoning that will make 1929 look like a practice round. The patterns are unmistakable. The timeline is accelerating. And the people who should be preparing us for what's coming are either clueless or complicit. History doesn't repeat exactly, but it rhymes with a rhythm that's getting harder to ignore. The crash of 1929 didn't happen overnight. It was preceded by months of warning signs that most people either ignored or rationalized away. Stock prices had become completely disconnected from the Corporation of America, the Tesla actual value of the companies they represented. Radio of its day was trading at 500 times its earnings. People convinced themselves that traditional valuation metrics didn't apply to revolutionary new technologies. Sound familiar? Today we have companies worth hundreds of billions that have never made a meaningful profit. Electric Century, artificial intelligence companies with vehicle startups with valued higher than auto building cars for A makers that have been no revenue trade, no factories or at multiples that would have been considered insane, even at the height of the dot-com bubble. The justifications are always the same. This time is different, we're in a new era, the old rules don't apply, but gravity always wins. And in 1929, when reality finally reasserted itself, the fall was swift and merciless. Between September and November of that year, the Dow Jones lost nearly half its value. Fortunes built over decades vanished in weeks. Banks that had seemed unshakable collapsed. The confidence that had fueled the entire system evaporated like morning mist. What's terrifying about our current situation is that the vulnerabilities are even more extreme. In 1929, most of the speculation was concentrated in stocks. Today, bubbles exist everywhere simultaneously. Real estate prices that defy all logic. Bond markets propped up by central bank manipulation. Cryptocurrency markets that swing by trillions based on social media posts. Private equity valuations that exist only because money has been free for so long that investors have forgotten what risk actually means. The interconnectedness makes it worse. In 1929, when banks failed, they failed individually. Today, the entire global financial system is so interwoven that a crisis anywhere can become a crisis everywhere in a matter of hours. Algorithmic trading can amplify crashes at speeds that would have been unimaginable to investors in the 1920s. When the selling starts, it won't just be fast. It will be instantaneous and brutal. And unlike 1929, we don't have the luxury of starting from a sound foundation. The response to the last crisis loaded the system with so much debt and created so many moral hazards that another crash won't just reset valuations. It will expose the fundamental insolvency of institutions and governments that have been living beyond their means for over a decade. Consider what's already happening beneath the surface. Commercial real estate is quietly collapsing as remote work and online shopping hollow out office buildings and shopping centers. Regional banks are sitting on hundreds of billions in underwater assets that they can't acknowledge without triggering bank runs. Pension funds are making increasingly desperate bets to meet obligations they know they can't fulfill. The cracks are spreading, but the media and politicians keep painting over them with optimistic narratives and creative accounting. The social fabric is fraying too. In the 1920s, despite the inequality, most Americans still believed in the system and trusted their institutions. Today, trust in government, media, and financial institutions is at historic lows. When the next crisis hits, it won't just be an economic collapse. It will be a legitimacy crisis that could tear apart the social contract itself. Yet the response from those in power remains the same as it was in 1929. Denial, deflection, and doubling down on the policies that created the problem. Central bankers speak in riddles about transitory inflation and soft landings. Politicians promise that more spending and more regulation will somehow create prosperity. Corporate executives buy back their own stock while their companies lose money. The delusion is total and absolute. But history teaches us that reality has a way of breaking through even the most elaborate fantasies. In 1929, the reckoning came suddenly and without warning to those who had convinced themselves it could never happen. The same willful blindness exists today, amplified by social media echo chambers and a financial press that profits from perpetuating optimism. The smart money isn't just preparing for a correction, they're positioning for a complete reset of the global financial system. They understand that when this bubble finally bursts, it won't just take down over-leveraged speculators and weak companies. It will take down currencies, governments, and the entire post-war economic order that has defined our world for the past 80 years. The only question left is timing. But even that follows historical patterns. Market tops are always accompanied by maximum euphoria and minimum concern about risk. Check political leaders dismiss warnings as partisan fear-mongering. Check. Academic experts explain why this time really is different. Check the general public borrows against assets they believe can only go up. Check. Every box on the pre-crash checklist has been ticked. The stage is set. The actors are in position. And just like in 1929, most people will be shocked when the curtain finally falls and they see what was really happening behind the elaborate performance. History doesn't repeat, but if you ignore it, it will crush you all the same. The parallels between 2025 and 1929 aren't coincidences. They're warnings written in the language of markets, debt, and human nature. The same arrogance that convinced Americans in 1928 that prosperity was permanent is alive and well today, dressed up in new technology and modern jargon. The crash is coming. The only questions are when, how severe, and which side of it you'll be on. Those who understand history have a chance to prepare. Those who ignore it will learn its lessons the hard way, just as millions did nearly a century ago. The echoes are getting louder. Are you listening? If this opened your eyes to what's really happening, hit subscribe. History has the answers, and the next lesson might save everything you've worked for.